What is going on, investors? Hopefully you guys are having a great day out there. Earnings season has officially kicked off, and we're going to kick it off today with BlackRock. Actually, the first here on the channel. Lots of requests for this one. So we're going to take a look at BlackRock, one of the largest investment banks. You may not invest in BlackRock. You might not even know what BlackRock does, but they are the operators of the popular iShares ETFs, which are one of the bigger ETFs in the world. So you might know them from that. So we're going to take a look at BlackRock, which just reported earnings today, this morning. We'll jump into a little bit of the numbers here. We'll take a look at the inflows, some interesting stuff going on here. We'll take a look at the revenue, the expenses, and the profit. We'll jump over to a little bit of valuation talk. Sometimes what we do here on the channel is compare the company to itself. In this case, we'll take a look at tangible book value, which is, I think, something you can do when you're analyzing kind of these larger banks. And then finally, we'll jump over to the stock chart. This one has reverse trend a little bit. It was on a pretty nice uptrend here, and it has reverse trend down about 2%, 2-3% today. So we'll pick some levels. If this thing keeps pulling back, I think there's actually a couple nice levels where you can do this. This is the system that I follow in my own portfolios, and it's a system that I've developed over 20 years of investing, and I think it will really, really benefit you if you take pieces of what we're going to talk about today. So if you're not interested in BlackRock necessarily, follow the system that I go through here, and it could help you pick your next winning stock. So BlackRock reported earnings today, Q4 beat basically across the board. What I thought was interesting is when we jump over the numbers here, we're seeing a shift. Over the last couple of years, there's been this just big emphasis on passive investing in index funds, just putting your money in the general market and letting the algorithms do the work. We've seen a shift over the last couple of years. ARK Invest has just really tore it up with some actively managed ETFs. And I think people are definitely taking notice of that because we're seeing institutional like active manage is actually outpacing index fund inflows. So this is net flows into BlackRock. So we have the iShares ETFs, big inflows into that, 78 billion. Wow, that is just absolutely phenomenal. Retail. And then we've got kind of this active versus index on the institutional side. And I just thought it was interesting. I'd show you this, that active is actually outpacing index. So that's really interesting. I think that's kind of a shift over what we've seen over the last couple of years. Now, jumping over to things here on the profit and loss side, in the BlackRock's case, definitely a nice little gain here. So we've got total revenues here coming in at $4.4 billion. Here's 2019. So year over year, we came in at, we'll call that 4.5, and we were at about 4 in the previous year. That is a $500 million change. That's super nice. And then you see here quarter over quarter. What I like to show you here is BlackRock shows you quarter over quarter and then year over year here. So that's really nice as well. So we were at about we'll call that 4.4, and we're still about 4.4, up fractionally quarter over quarter, but it is up, and that is nice. Now let's take a look at expenses. Again, year over year, we were up about 500 million. Okay. Now let's take a look at what expenses are doing. We've got total, they really break the expenses down here. We'll take a look at it from a total perspective. We came in at about $2.63 billion in expenses. In the previous period, we were about 2.44 or so. So we were up about 191. So our revenues year over year up 501, and our expenses are up, we'll call that 190 million. So obviously they're generating more profit. Now, quarter over quarter, we're up about 18 million. But again, our change on the revenue side was we were up about 109 million. So they're doing a really nice job, obviously growing revenue, but at the same time controlling expenses. That is leading to increasing operating income, which is a line in the sand that I always look at. So for the last 3 months, we generated 1.85 billion in operating income. That is 310 million more than we did the previous year. We were at 1.54. Now, previous quarter, we were at 1.75. And again, we made 1.8. That's a $91 million change just over in the last quarter in the operating income. This company's doing a great job controlling their cost and generating lots and lots of operating income. Now, they have other expenses. So they have gains on investments or losses. They have interest and other things that they have here. So that gets us down to a net income, which is a number that sometimes you can discount on some companies, but with BlackRock, I would definitely come all the way down to the net income side because these are all really important things, obviously, and then we have income taxes that they're going to pay as well. So we came down here, 1.7. Let's just come all the way down to the bottom line because they've got this line here in here. So we've got 1.5, we'll call that 1.55 billion in net income. In the previous period, we were at 1.3. That's a $247 million increase year over year. But take a look at over the last quarter, we're up 184 million when we were at 1.364. So really solid growth across the board at BlackRock, just really steady. And obviously when you come over here to the stock chart, this thing's just steadily been rising. So it's been mirroring that. Now, the other thing you can do when you're evaluating a company is sometimes what people do is like they'll compare Tesla to GM or Toyota. And obviously if you've done that over the last 15 years, you've basically got obliterated if you said, well, Tesla's this PE ratio, so Ford and GM must eventually catch up. I think that is fool's errand thinking. Anybody that thinks that, I don't think is really evaluating those companies properly. Could you do it in the bank space? Sure. Could I bring up some, JP Morgan or some other banks here compared to BlackRock? Sure, you certainly could do that. Or maybe like a Schwab is probably a little bit more closer comparable to a BlackRock. But what I do is I just compare the company to itself. And now BlackRock's really jumped around here. This price, I don't know if this data is like 100% accurate, but we're coming in here. We got a price to tangible book at 115. Historically, it's been lower, okay? But it has been in this range, okay? And if you want to jump over here just to the last year, you're actually kind of in a range. So it hasn't jumped around a whole lot. I don't think we can get a lot from this. In some other scenarios, it is. I just wanted to throw you that in there because it is a part of my toolbox in terms of investigating a company. I don't think we got a lot from that. So we jump over to the stock chart. What I like to do is now, okay, the financials look good. Okay, this company is trending in the right direction. I think they're on the right end. As long as the stock market continues to kind of churn higher with all the stimulus and things like that, where interest rates are, I would guess that's probably going to happen. So BlackRock's going to be well positioned to capture a lot of those gains, a lot of those investors, and a lot of fees. Now, so the stock chart's been on a monster run. We've reversed here just in the last day, obviously with earnings being reported. So technically, this thing could break down from a shorter term perspective. Okay, this could be seen as a top. We've created a little gap here. We could run down. There's a little bit of a gap, kind of a gap here. Well, I could see us, coming down to this level. Now, can it do this? Maybe, again, with technical analysis, it's not giving you possibilities. It's not giving you certainty. It's giving you probability. And I think if this thing keeps walking back, the first stop here is right around 720. Okay. That's personally where I would first want to step in, right? And then you can plus or minus about $5 or $6 on these numbers that I give you because we're talking about a $700 stock. A dollar here, dollar there is not that big of a deal. So 720, somewhere in that range would be the first level because it was kind of our peaking point here. And then once the stock broke out from this spot, man, buyers really stepped in. So when it comes back to this point, I would expect buyers to start stepping in, and this could be a first area where I'd want to get it. Now, this thing keeps reversing trend. There should be another spot here. This was resistance here. Once we broke out, buyers really stepped in, came back down here, retested this line, buyers stepped in again. And that level is about we'll call that 685 or so, 685 to 690. Buyers should step in on this one. Again, we would be actually probably breaching our 50-day moving average here, somewhere probably in between that, right at $700. I would expect a significant numbers of buyers to step in. So this one's not too far away. We're at 760. We're probably about $30 or $40 away, where I would expect heavy buying to, not necessarily heavy buying, but definitely buyers wanting to step in at the 720 level. Definitely buyers stepping in at the $700 level. And if for whatever reason it gets down even lower into the 680s, 690s, that's definitely where I'd want to step in with this one, maybe a full allocation or 80, 90% allocation on this one. So that was BlackRock. You got a little bit of a yield, 1.86%, PE ratio 23, not wildly overvalued. If you think the markets are just going to continue to trend higher, these bank stocks are probably very, very well, especially investment banks like BlackRock, which are a little bit sensitive to interest rates, but are more sensitive sensitive to people just kind of putting their money into them and allowing them to do the work and generate these fees. BlackRock is very, very well positioned to do that. So that was BlackRock. We'll be back again with more videos all this week, all next week, really all month, 2 months long with these types of videos. Hopefully you guys are doing well out there. Leave me a comment down below. What do you think about this one? Thanks for tuning in. Good luck with your investments.